Hey guys, Jeff with OptionBoxer.com. Today I'm going to share with you the 5 most important things I did to make trading options way easier and much more profitable. First, before we get into it, please know that I'm not a registered financial advisor and this video is not a recommendation to buy or sell any security or place any options trade, or any trade for that matter. Please make sure you're doing your own research prior to trading or investing. Now, without wasting any of your time, I'm going to give you the 5 things I did to simplify my options trading and improve my profitability probably tenfold. 1, I invested most of my money into dividend stocks with business models that I both understand and with products I use in my everyday life. Number 2, I determined all the option strategies that I would use and I stopped trading random strategies. I stopped doing it completely. Number 3, I created custom scans to find option setups that match those strategies. Number 4, I created custom bullish and bearish backtests for my strategy to see potential profitability immediately. And number 5, I stopped chasing the next great strategy or unrealistic returns from my trades. So number 2 and number 5 kind of go hand in hand, but I just stopped chasing what was unrealistic. That's it. I know it doesn't seem like any great triumph, but I can assure you it took me years to narrow down this process. I no longer waste hours looking at chart after chart to find a setup. That was a fruitless exercise and almost always led to losses. If you've seen what you came for, then I thank you for watching this video. I hope you'll consider liking and subscribing to the channel before you go. If you do want to stick around, I'll talk some more about what I did specifically to improve my ability in each of those 5 areas. If you're interested to learn more about any one of those 5 steps above, then I'll leave links to those videos in the description below. With that, if you're still here, I'm going to dive further into the 5 things I did that made my trading much, much easier. So looking at number 1, I invested most of my money into dividend stocks, and I did that for 2 reasons. 1, for the obvious passive dividend income that these stocks would provide, but 2, and most importantly, is because I didn't have enough time in my busy day to put all of my capital to work. What I mean is on a $20,000 account and even an aggressive 5% per trade risk management strategy, I would still need to actively manage possibly up to 20 trades at any given time. As a teacher, I just don't have that kind of flexibility in my day. I can't log in to manage that many trades, look at that many charts, or even consider the best way to manage that many possible trades. And then as the account grows, it would only be even more trades. So it just made sense to park most of my money into stocks or ETFs I think will stand the test of time, that I understood, and that have products that I both like and use myself. Now, what I didn't say, but should now say, is I always keep around $3,000 to $5,000 of cash available for options trading, options day trading, or to take advantage of an opportunity that I find. Number 2, I narrowed down the option strategies I was using. This one was a little less obvious for me for some reason, but instead of constantly trading the unlimited number of option strategies that exist, I just decided to focus on the 5 I understood the best. The bull call spread, the bull put spread, the bear call spread, and the bear put spread, along with the iron condor, made sense because it would always allow me to take advantage of any market condition. We in a range-bound market? No problem. Let's use an iron condor. We in a low volatility bullish market? Not a big deal. Here's a bull call spread, and so on. While this approach may mean I leave some money on the table by not using some exotic spread, I don't ever have to worry about the worst case scenario. That scenario is identified immediately using these 5 risk-defined spreads, and that means I don't even think about my options trades once my trading platform is closed, other than that I need to log back in and see how things are going. Number 3, I created the 5 custom scans to find the setups that I like and fit my trading strategy. Likely, whatever scan you create would be different, but here's my bull call spread criteria for an example. The first is a stock filter to remove any stocks below $10 and above $500 per share. Next is an options filter to remove any stocks that may fit the technical criteria but don't really have tradable options markets. The next 5 filters were study filters to define the exact criteria I want to see before ever placing an options trade. I want to see, did price just cross the 9 EMA line? You can see that here with the custom scan. Is the RSI oversold? Is the average share volume greater than 1 million? I want to see really heavy volume on a particular company. I don't want any low volume stocks. Is the IV low? is the stock price below the lower standard deviation channel. So if I'm looking at a bullish trade, I want to know that the price has dropped below the lower standard deviation channel. Those are the criteria I think create a very high probability trade, so I don't want to waste any time looking at other charts. Once I've identified a candidate, then I'll proceed to assess the chart along with the overall state of the market and begin building my assumption about what might happen next or in the days ahead. Once that's decided, I move on to the option chain to determine my strategy, my risk criteria, my profit target, my stop loss, my time horizon, and so forth. Generally, and something that I've only recently adopted, is to keep options trades on my books for as little time as possible. I just try to identify a reasonable but probable profit target so I don't have to hold the trade through the volatility that we all know is the options market. Number 4, I created the 2 trading strategy backtest so I could avoid having to test my strategy on every single trade. That just became so overwhelming. Now, I'm not sure if you're anything like me, but before I put my money on the line, I just have to know I've done my due diligence. Part of that process is making sure my trading strategy actually works in the market I've identified. Without this step, I couldn't know without the time-consuming task of manually backtesting the strategy against the charts. Plus, Thinkorswim doesn't charge for this feature, and with just a little effort, understanding ThinkScript is very much possible. And last but not least, number 5, I finally stopped chasing unrealistic strategies or returns. I'm honestly ashamed of myself for this one because I've always considered myself a conservative person. But here we are. I mean, for years, I traded every strategy I could find. If you've been on this channel for a while, I even created just about every strategy I could think of. However, after years of inconsistent profits and an exhausting search for that next great strategy, I had to find something more effective, and that's what I hope I've shared with you here today. In closing, I think it's very important that I also share this. I wish I could tell you these 5 steps are a true shortcut for each of you, and that by using them, you'll be instantly better at trading. I suppose you might, but the reason that they're the 5 most important to me is because I went through the process in each of these areas. The process for me may have taken a year. That process for you may only be a few days or a few weeks, but I think the process must occur for a well-rounded grasp of the concept. Without it, there is really no foundation to stand on, and I think we all know how that works out. In any case, I hope God blesses each and every one of you in the year ahead, and I do hope you'll consider liking and subscribing before you go. If you have any questions, feel free to reach me in the comments below, but until the next video, take care.